What do we make of this shift in the markets, Guy?
Hello, Melissa.
Welcome back, Guy.
Yeah, we missed you,
nice
Guy.
I watched this. Did you miss me, Mel?
I did.
Let's be honest, Mel. No is the answer.
Of course I did.
To which I say I have feelings too. To which you say, yes, I know. Exactly. So now that we're over that, it is nice to be back. I think it's, well, the rotation out of banks, maybe a little profit taking in earnings next week. That could be part of it. I mean, some of these, and Karen can speak this better than I, but J.P. Morgan at one point was trading close to 2.5 times book value, probably 2.6 times at its peak tangible book, which, again, levels we probably saw pre-financial crisis, which maybe it's justified. I don't know. Maybe it is different this time, but I think the run of these banks has been amazing. I also think people are taking money off the table in earnings next week. We
were at highs just on Thursday, and we're not too far off of them at this point. I mean, in order to justify another move higher, do we have to also justify a re-rating of banks from here?
Maybe. I mean, they traded up on a lot of good news, right? The hope, well, the market improved, so everything goes along with that. So, and credit quality being better and more activity, we did start to see an IPO market open up. Maybe a little bit of M&A and all the market moving higher is also good for asset wealth management business, which the big money center ones have. So I hate when they run up so strongly into earnings. Deregulation, right? So we had the CCAR adjustments. That was very positive for banks. So they kept going up on the same good news a number of times. I think it was overdone. I think that piece was well-timed. It doesn't say they're bad. It just says a lot of the good news is always already priced in, which I agree with.
Yeah. Always good to separate the Wall Street banks from the regionals, right? So the Wall Street banks benefit from higher stock market. I just think the market's very rich at these levels. It's taken a breath. But with all this rotation we've seen, I actually think it's pretty healthy to get into other sectors for sure.
And we did see that rotation, as we mentioned. The regionals were higher today.
Yeah, and you don't see that too frequently, I don't think. And so if you look at like Zion and you look at Citizens Finance, some of these names in the KRE, the Regional Banking Index, I mean, they trade at like 1 times book. You know what I mean? So, we were talking about this last night, and, a lot of folks, I think, in a market environment like this, where they think they have the all clear, you're happy to let stocks run. You're happy to let, like, a J.P. Morgan, for instance, get to a level from a, listen, the valuation is what it is, right? But, like, we have historical norms going back to what Danny just said, and certain later, you have big winners, and I think what happened is a lot of folks, headed for the door at the same time. And when you think about what are these stocks discounting, or what are they not discounting when they're trading like this into their earnings, it just kind of makes some sense, in my opinion. And especially if you look at the back half of the year, I mean, yeah, there is a backlog for IPOs, but if you can't bring them right now with markets at all-time highs, you're going to get through Q3, and then all of a sudden there better be a rush in Q4, or these stocks are trading at valuations that don't make sense relative to the backlog.
I just want to say, having said, I think the setup going into earnings isn't great. I am still long. I have a lot of J.P. Morgan. I have a lot of Citibank. I think there is still the promise of how efficient banks could become, how they're such a good target for AI, and that margin improvement in expenses could be so important to the bottom line. I am short some upside calls. I'm not going to sell it just because they've had a nice run and pulled back. I still believe in the longer-term story over time.
Are you hedged in any way?
A little bit. Sold some upside calls.
Our crack staff in EC just put a Citigroup up, so you might as well put it up again, because that's one I still think makes sense. And last week when the stock was close to 90, that was I think it was like a 17-year high-ish in Citi. Don't at me if I'm off by a year, but you get my drift. And, at its trough, it was trading 60% or so of book value. And that's a stock that I think it's reasonable to suggest it could get back to those levels, which was somewhere between 95 and 100. I know that's not a big move from here, but I still like Citi.
I think in general, the large stocks, across all the sectors, I think people feel confident owning them if they have decent fundamentals, valuation out the window. I think that's not a reason to necessarily sell them. I think people take comfort in that. I think we're going to see that in the quarterly reports.
We've seen that time and time again across that. I mean, industrials, for one, pockets of discretionary when it comes to Walmart, for instance. Nobody's questioning the valuation of Walmart here, at these levels, and for the big banks. So do we need that comfort? Do we still, with markets close to record highs going into the second half of the year now, do we pay up for that comfort?
Well, it's funny. Valuation, we say this all the time. Nobody cares about valuation until the market cares about valuation. I'm not trying to be funny, but that's just sort of the way it works. And on the way up, people look past it. When something happens, they miss a quarter or they say some guidance that might be sort of iffy. That's when everybody starts to look at valuation again, and that's when it matters. Right now, seemingly, it doesn't matter for the banks. I will tell you, and this is going to sound somewhat incredulous, but I think Walmart's reasonable at these levels for a myriad of different reasons. I know historically expensive to itself, but that stock sold off last quarter it's gotten almost the entirety of it back. Not a huge move, I know, but it's hanging in there despite valuation.